Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
It's Chuck, Paul, and Tucker with you here, and as we kick things off today, got a little bit of volatility going on. Nothing crazy, but about 0.5% down in the S&P 500. And again, I think we're at a point in the year where there are a few things that are kind of coming into focus. And, we're going to kind of direct how the next 6 months or the last 6 months of the year end up going. Number one, we got an earnings season that's going to be kicking off pretty darn soon at this point. Taking a look at, kind of your big ones that are out there. They're on tap, a few weeks out, but as of right now, you've basically got earnings, really starting to kick off in the next week or so with the banks starting reporting. I believe it's next Tuesday, JP Morgan, Bank of America, Goldman Sachs. So, again, we're within a week of that kickoff. And then the heavy hitters, they are back a couple weeks further as you get to the last week in July and first week in August. So this is all kind of prologue to that. But the two things that I think are worth watching here, and there are two top stories as we kick today's show off. Number one, President Trump early this morning saying, and I'll quote him, he was asked, about the ceasefire with Iran. He said, quote, "To me, I think it's over. I don't want to deal with them anymore." Now, whether that means that the ceasefire actually is or is not over, I think is an open question, just because the two countries have been firing stuff at each other for the last month or so, even after the ceasefire extension from June 17th, I think it was. And so it's not like you've had a complete halting of firing. Like, the firing hasn't actually ceased during that time. I think the open question on this is, hey, does this represent an actual change in how the two countries are going to approach things? Or is it just, more talk? We've seen both sides kind of talking to their respective, domestic and international audiences throughout this. Is this just more talk? And I think we're going to have to see how things play out there. The other one that we're going to get to is what's going on with semiconductors in the tech space. And I think these are the two things that are really going to determine how the next 3 to 6 months go. On the oil side, you want this to just be talk and not have oil become a problem for markets again. On the tech side, you want to see something that shows that semiconductor stocks can continue to find ways to grow that revenue pie and continue to get the customers they want and not start to see growth rolling over. So these are the big questions for the second half of the year, in my opinion.
Yeah, it's to elaborate that a little bit further, the war ties directly into inflation, which is a byproduct of the fact that if we are to see more closures of another closure of the strait or just any decrease in traffic in terms of global trade, that's something that will certainly be on economists and investors' minds here heading into the next few weeks. We'll have a Fed meeting at the end of the month on the 29th. This afternoon, we'll get the Fed meeting minutes from last month's meeting at 2 o'clock. And so inflation and the AI trade, to me, if I'm talking with people, those are usually the two things that I'm bringing up that are at the most focus for the second half of the year here. In terms of the U.S. and Iran war and those talks, it's something that I've just sort of thrown my hands up in the air and just you keep apprised of what's going on in the news, but I'm sort of done trying to speculate as to when this progress is going to be made and more just react to what you see on a daily basis.
President Trump later this morning, I'm quoting here from Bloomberg, also indicated that they may put the blockade back in effect. So obviously, look, if you get to that point, then you do start to most likely see the ceasefire breaking down more heavily. The piece that I'll point out, again, I'm a big believer in pay attention to what people do, not what people say. It's what I've said throughout this entire conflict. It's what I've said about things even before. The piece that caught my eye overnight was actually not anything from the U.S. or Iran as it relates to oil, but rather it was something from a little country in Asia called China. Some of you may have heard of it.
Little.
Very, very little. And here's the thing. China is the main reason why oil prices did not go sky high in May or June. They cut their imports by somewhere in the range of 4 to 6 million barrels a day for crude oil. And when you have global inventories looking like they did, that means, hey, for a couple months, they basically, pulled 300 million barrels worth of demand off the table for crude oil. China overnight indicated that they were removing their refined product export ban for the remainder of July. So here's the thing about the Chinese energy industry. China produces actually about 4 million barrels a day of crude oil, but they still need to import quite a bit more in order to provide for the supply of crude to make the gas, diesel, jet fuel, all the stuff you need to run a country. They have a number of large state-owned refineries, but they also operate what are known as these teapot refineries, which sound like, look so cute. Look at these little they're still, sizable in that they're not just refining like one barrel of oil, but they're not these giant state-owned enterprises. And pretty much what's happened in the last couple months is a lot of these teapot refineries have, either shut down completely or cut their runs significantly because China was most likely using significant stores not just of crude oil that they had, stockpiled, but also refined product that they had, probably stockpiled. No one really knows because it's, China, everything's kind of opaque. So here's the thing. When you have refineries, if you've ever worked at an oil refinery, I haven't, but I know enough to be dangerous on it. The way that oil refiners make their money is by paying X for crude and selling for X plus, Y for the refined product. The number that we look at is what's called a crack spread. It's basically the difference between what crude costs and what the refined product that they sell they're able to realize. Crack spreads in the energy industry, the common one that's looked at is a 3-2-1 crack spread, typically sits somewhere in like the $20 to $30 range. They're up at around 60 right now, so it's really profitable with oil at 70 to refine it into products. If China is getting rid of this product export ban, it stands to reason, at least the way I see it, that these teapot refineries, which China has a lot of them, and it can equate for a lot of demand for crude oil, hey, if they can make a boatload of money starting to spool up production and then selling it to whoever needs it, gee, that could represent a significant increase in crude oil demand from China because you're going to need crude oil in order to make that product. So the question that popped into my head is, hey, is it a coincidence that as tensions started to ratchet up between Iran and the U.S. again, that China is now not being friendly to the situation, but instead maybe saying, okay, we're going to provide that additional demand now.
Gasoline on the fire, pun
and
intended.
yeah, if you really want to play this game, fine, have at it. The other thing that's exacerbating this is the Ukraine for the last 6 months or so, but really ramping up in the last couple, is doing these nightly drone raids into Russia where they're just basically lighting Russian refineries on fire on a regular basis to the point where Russia has now curtailed... hang on, let me get that.
I got to take this.
Russia has now curtailed their exports of refined products and, in fact, are needing to import gasoline, jet fuel, and diesel. I mean, again, this is Russia, so, things are bad if Russia's needing to import these things. So this is leading us to the point where hey, we're going to have to see how the next few weeks play out, because if this does escalate militarily and China decides, hey, we're going to play hardball by restarting those imports that we had curtailed, then you've got a situation where oil prices can potentially get ugly in the next couple months. I still am a big believer that the real window for any problems is, throughout the remainder of this year, because after that, more export capacity becomes available through additional pipelines that come online and things like that. Businesses continue to adapt to the situation and reducing their, hydrocarbon demand as much as possible. But the China piece overnight was the one that really caught my eye more than what's being said here.
You have obviously been following the energy markets a lot closer than I have over the last few months with all that's been going on here. And what has been so puzzling to me is we covered a piece on the show earlier this week, Chuck, where they mentioned, I think it was Morgan Stanley, that there could be a glut of oil coming later this year, which just sounded so foreign to what we had been talking about for months prior. And some of that is due to what you just mentioned with China before. They were probably a big reason why the oil prices were able to fall as precipitously as they did once there was this perhaps renewed enthusiasm that a deal would be struck. But here we sit today. Obviously, oil is up on the news of the continued back and forth between the U.S. and Iran. But I still am puzzled as to that story, this idea of there being a glut of inventory in the near term, based on just the factors that you mentioned, that, hey, maybe China's demand is going to start to pick back up again. You have all the issues that are still ongoing between Russia and Ukraine. The energy markets are absolutely impossible to predict. It really did surprise me that we were sitting at $68 a barrel for as long as we did, when it seemed like it was tenuous as if to whether or not a deal was going to be struck. And so I guess the question I pose to you is just why the energy markets have stayed so low from a price perspective with all these potential pitfalls, and maybe it is just as simple as less demand than anticipated.
The Chinese lack of demand is the biggest one. Beyond that, it's something where we've talked about this a bit, but look, there's this belief that, okay, this isn't going to be, this isn't, the U.S. administration is not going to let something catastrophic happen, is the belief that's out there. And look, if you're someone trying to trade these things and you keep seeing oil getting bludgeoned down anytime there's any positive news on what's going on in the Middle East, you basically say, no, there's better ways to make money than doing that. And so, you take a look right now, there's basically no long interest and a ton of short interest in anything related to energy. And it's just because no one wants to play that game on the long side. It's just a dangerous one. So we'll see what happens. Look, this could just be, more sparring and it ends up being nothing and, we get through the rest of the summer because, hey, if things look the way they've looked the last few weeks in terms of volumes through Hormuz, it's not really a problem. You're not getting back to $55 a barrel oil, but you're not going, back to 90 either. It's something where if that happens, that's great and that's what you'd like to see. But let's see if this is a turn, just because China making that announcement last night made my antenna perk up a little bit. And so we'll see where things go. But otherwise, I don't know that there's necessarily any huge shift here. Quick break. When we come back, we're talking Nvidia and semiconductors.
The Financial Exchange streams every day live on YouTube. Subscribe to our page and follow the markets all morning long. Only here on the Financial Exchange Radio Network.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The document may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your assets from the cost of long-term care takes more than good intentions. It takes a plan. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, shows how these trusts can help protect certain assets from nursing home costs without giving up everything you've worked so hard to build. You may be surprised to learn that you can continue living in your home, receive trust income, and still maintain important flexibility in your planning. The guide also explains how these trusts may help your family avoid probate and preserve important tax benefits for future generations. If protecting your home, investments, or other assets is important to you, request your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Register for this year's DAV 5K on Saturday, November 7th at Fort Independence on Castle Island. If you're not able to participate, you can still support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
Let's talk a little bit about what's going on in semiconductor land. A couple pieces here. Number one, from Bloomberg, Nvidia's $1 trillion slide since valuation down to pre-AI boom levels. Second one, Micron stock stumbles deeper into bear market. Is it time to worry? The first thing I'll always point out, individual stocks can't go into bear markets. They are a single stock, not a market. And thus, it's a technical thing, but like the reason why we call them bear markets is because they don't happen all the time, and it's happening to the entire market. Individual stocks can go through a period where they fall 20% pretty regularly. It's not like an uncommon thing to see that happen.
Yep.
So I just don't like making a huge deal about like, oh, this stock fell 20%. Well, lots of stocks see 20% volatility in any given year. and it's not particularly notable.
What drives me crazier is the valuation play, using the dollars of a valuation, like, $1 trillion drop for Nvidia,
Right.
when you are a $5 trillion company.
They were 6 almost,
Yeah,
like 5.7.
So I mean, that's how you get
Right.
to the $1 trillion thing, and this is also used in, Mark Zuckerberg lost billions of dollars because Meta stock went down. I get why journalists do it, because it's eye-popping for the reader, but the more and more you read of them, you're like, okay, I know this trope. But anyway, we digress.
We do. So here's the thing. NVIDIA right now, if you were to look at some of its financials, price-to-earnings ratio is at 30.15 times earnings. Price-to-sales is at about 19 times sales. So the big question with NVIDIA is not whether they're making a boatload of money right now. They
definitely are.
The big question with NVIDIA is, will they continue to see the amount of money they make grow? And if not, then what do the earnings look like 2, 3, 4 years out? Because then NVIDIA quickly becomes not something that's trading 30 times earnings, but maybe 60 times earnings if these are not sustainable. It's just kind of wild when you actually look at it. NVIDIA's net income right now is, for the trailing 12 months, $160 billion. $160 billion. It's crazy. Before the AI boom, their trailing 12-month earnings were around $5 billion. So the question that matters, anything in investing is always distilled down to this. I say this over and over. Is this permanent or is it temporary? Back in 2021, we had a whole bunch of people thinking that the conditions that were created by the pandemic were permanent. It's why everyone was piling into Zoom and Peloton and all these, stay-at-home stocks. And as it turned out, well, that was just a temporary thing. Remember all the stuff about, like, New York is dead? Mm-hmm. Did New York City look dead when the Knicks won the NBA Finals this year?
No.
Or did it look like the coolest place on earth? It looked like the coolest place on earth. So, with NVIDIA, the question is, hey, this inflection to $160 billion in net income, is that temporary or permanent? I don't know the answer to this, but that is the entire ball game when it comes to AI, not just for them, but also for the one that's being mentioned here, Micron.
Yep.
If you look at their net income and go back to pre-AI bubble, I'm going to call it a bubble. I've been doing that all along. Micron actually had net income of negative $3 billion in mid-2023. As of right now, their net income for the last 12 months is $50 billion. Is this an outlier, or is this kind of the new norm that we should expect from them? That's the whole ball game.
That is the whole question, and there's two different stories here. Nvidia had the luxury with markets of being priced on a forward price to earnings basis a little bit higher in past years because their earnings growth continued to be really robust. And to be clear, it still is, but the pace of it is projected to slow in 2027. There are some things out there where you have competitors looking to undercut margins that Nvidia has commanded, which have sat around 75% for the last few years here. Does that sustain is the question. And with Micron, anyone who's invested in memory stocks knows it's been a commoditized, painful industry to invest in. The question is it different now, and is there more sustained demand for these memory products in subsequent years, 3 to 5 years out? That's what the whole valuation ball game is about here.
Now, you want to talk about bear markets? The Korean stock market, the Kospi, is down 22% since June 22nd. 22% fall in 2 weeks. Now we're talking a bear market, but it's still up 72% year to date. Quick break. When we return, Wall Street Watch and Ask Todd.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about how Medicaid irrevocable trusts operate. Todd, many people are afraid that if they transfer money to an irrevocable trust, they will be giving up control of their assets and will have to ask their trustee for permission to spend their own money. Now, is this a valid concern?
No, it's really not. And folks, when you think about irrevocable trust, please remember that there are many different kinds of irrevocable trust. There are some that require a loss of control, rigidity, inflexibility. However, the trust we're talking about when you're protecting assets from a nursing home allow the donor to remove and replace the trustee, allow the donor to have really an unbelievable amount of control over the assets that are in the trust. They can live in their house, they can manage and invest their own money, they can sell a house, they can buy a new house. When the money's invested, they can have the income come directly to them. Folks, the control you keep over your assets in an irrevocable trust is really something you must try to learn about. And that's why we're giving you away a guide today to help you understand these trusts.
Request this brand new guide from the folks at Cushing & Dolan at 866-848-5699. It's called Unlocking the Power of Medicaid Irrevocable Trusts. Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. 866-848-5699, or you can request it from legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Time now for Wall
Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today. Right here on the Financial Exchange Radio Network.
Well, we're seeing some volatility with markets in negative territory after President Trump said the ceasefire with Iran was over, following another round of Iranian attacks in the Strait of Hormuz, sending oil prices higher. Right now, the Dow is down 1.2%, or 637 points lower. S&P 500 down 0.6%. NASDAQ down about 0.4%, or 100 points lower. Russell 2000 down over 0.8%. 10-year Treasury yield up 6 basis points at 4.58%, and oil jumping over 6% higher, trading right below $75 a barrel. Energy stocks, including Chevron and others, are seeing gains in reaction to increased tensions with Iran, while travel stocks like United, Delta, and Carnival are seeing losses. Meanwhile, Apple said it plans to increase investment in U.S.-made chips, with plans to spend more than $30 billion with Broadcom in the next 5 years. Apple shares are down modestly, while Broadcom is up by 4%. After sinking 18% yesterday, following plans to sell more shares, Rivian Automotive stock is down another 2.5% today. And at 2 o'clock this afternoon, the Fed will post meeting minutes from Kevin Warsh's first meeting as Fed chair. I'm Tucker Silva, and that is Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutzke is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutzke.
And as promised, we are now joined by the one, the only. Are you actually the only Todd Lutzke?
I don't know. I think so.
There might be another one somewhere, but you're our Todd Lutzke, and that's
it.
That's the one that we love. You know, that's the important thing.
The world doesn't need another one of me.
The phone lines are open if you want to talk to our Todd Lutzke at 888-205-2263, because the segment's called Ask Todd. It's your chance to ask Todd your estate planning questions live on air right now. 888-205-2263 is the number. We can usually get through 2, maybe 3 calls, so get calling early to get in line to ask Todd your questions, because otherwise we'll run out of time and we won't be able to do that. 888-205-2263 is the number. Mr. Lutzke, how you doing today?
I am doing wonderful. You?
Okay.
It's always something with you.
Went out for Chinese yesterday.
Chinese food, yeah.
Got to the end of the meal.
Mm-hmm.
Got the cookie. Opened it. No paper inside. It's kind of unfortunate.
That is very unfortunate.
It's unfortunate.
It's an unfortunate
little
cookie.
bit. Want to talk a little bit about irrevocable trusts. Know that the term irrevocable can scare people a little bit. How does an irrevocable trust actually work? Specifically, I guess we're talking the ones that are used to protect assets from Medicaid. Like what do they actually do? How does it do that, I guess?
So, and I'm glad you clarified that, right? Because there's so many irrevocable trusts out there. I mean, I always worry when the clients come and they call and they say I Googled irrevocable trust and I got like a million hits. That's because there's a lot of different kinds. We're focusing, and as Chuck said, we're focusing primarily on the irrevocable Medicaid trust. And it's so different because in a lot of ways it's irrevocable, but in a lot of ways you'll feel that you haven't lost any control at all. And I think that's the lion's share of the fear that many people have when they're dealing with these trusts. So how does it work? I mean, it has language in there that in essence says, you have the right to the income, but not directly the right to the principal. So basically, if you can't get the principal, the nursing home can't get the principal directly. But at the end of the day, you're going to find when you go through this document, when you go through this, if you want, the guide we're giving away also deals with these trusts, you're going to learn really how they work day to day. Like people come in and they'll say, well, if I put my house in, can I sell it? Well, yes. And can I buy another house and then move? What if I want to move after I set up a trust? Yes, you can sell it and move. And what about the adverse, income tax consequences? I hear all the time when I Google these trusts that they're irrevocable and they have like really bad income tax rates. Well, no, if you make it a grantor trust for income tax purposes, you're considered the owner. And if you're the owner, then you still get the same capital gains tax treatment you would get if you sold your own house. So what I mean by that is there's section 121 of the code says you get a $500,000 capital gains exclusion on selling your home if you're married and it's your primary residence. Oh, but if I put it in the trust, then I don't own it. Well, you still get the $500,000 capital gains exclusion. So there's no adverse income tax to selling it. You could buy another house. Yeah, well, if you sell it, you're technically homeless. I know it sounds weird, but you can then go buy another house and move to any state. Doesn't matter. The trust will go with you and you won't reset that 5-year waiting period. So you can then just have the money go out and a new house come in. And you're saying, well, geez, that sounds like a lot of access to principal. Yeah, but that's okay. You're allowed to do that and have your new house and live in another state if you want to and not restart the clock. So, I mean, there's so many things you could put you could put your rental property in. You can put vacation homes in. People wonder, what can go in there, your investment portfolio, manage your income. I mean, there's collect income. There's so much you can do and so much flexibility with these trusts, but people still get nervous with them.
Talking with Todd Lutzke from Cushing and Dolan. We do still have room on the phone lines for your estate planning questions for Todd. Phone number is 888-205-2263. That's the number to call to ask Todd your estate planning questions live on air right now. 888-205-2263. Again, limited time to actually take your calls, so do make sure that you get in line so that we can get to you. 888-205-2263 is the number. We're going to take a quick break now, but when we return, it's right to your calls. That number one more time is 888-205-2263.
Ask Todd with Todd Lutzke every Wednesday at 10:30, only here on the Financial Exchange Radio Network. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
The most important part of an inheritance isn't always the money. It's the understanding, the intentions, and the family relationships left behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, estate planning isn't just about who gets what. It's about communicating your values, explaining your decisions, and helping to avoid misunderstandings after you're gone. Our new guide, Talking to Your Kids About Inheritance, explains why these conversations matter and what to consider when fair and equal may not mean the same thing. You'll learn strategies for managing expectations and helping your family understand the thinking behind your plan. Get your free guide today by calling 800-393-4001. That's 800-393-4001, or you can request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
You're listening to Ask Todd with Todd Lutzke on the Financial Exchange Radio Network.
All right, let's get to your questions with Todd Lutzke. First up, we've got Bill in New Hampshire. Bill, what is your question for Todd?
Hi, can you hear me okay?
Sure.
So, does this type of trust with the 5-year extension work in New Hampshire or just in Massachusetts? Somebody told me, oh, it won't work in New Hampshire.
Yeah, so I'll give you a little story on that. And this is the problem, right? The misinformation that's out there is distressing. They work in New Hampshire. First, let's get the answer out there. I've got lots of clients in New Hampshire, and we've had these trusts. Now, ever since probably 2000, I'm going to say 19, I haven't really been battling with these trusts because there's been a Supreme Court decision in Mass anyway that really blessed these trusts, if they're drafted right, and that's the key. So you get to people who maybe they give you misinformation because the trust they've drafted perhaps didn't work because they weren't drafted properly. So I had to do this. I remember it was 3 times in a row, but I say in a row, well, probably within a 6-month time frame, maybe 9 months. I'm attending these fair hearing trials in New Hampshire defending our trust because they have this one trust case in New Hampshire called the Braderman case. And the Braderman case has an irrevocable trust in it with language, and they challenge the paragraphs in these trusts, right? The one paragraph they were trying to challenge that, make the assets countable, meaning eligible, meaning available for the nursing home, was there was language that's called a limited power of appointment where the trust can make, the trustee has the power to make distributions, the donor has the power to appoint the assets to, a limited group of people, children of all generations, but not themselves. And they were saying there's this case in New Hampshire that had that language in it, and in the same paragraph said, oh, and by the way, without creating any obligation or really just no obligation to do this, it's the donor's wish, intent, hope that if he ever needed money, that the trustee would distribute money out to the kids and it would be used for his care. Well, you can't have that language coupled with the power of attorney or with the power of appointment language. That language would make the asset available because the rule is if you can get it, then the nursing home can get it. Well, that's bad language. But they were using that case to say the trust is no good. Our trust, Cushing and Dolan's trust, is no good. Yeah, but our trust doesn't have that bad language in it. It simply says distributions can be made, or the donor can make a distribution, or power to appoint the principal to a class consisting of children of all generations, but not to the donor spouse, or the donor's estate. So we prohibit that. And that's where we stopped. And they said, oh, well, no, you can just distribute it out and then give it to the kid and the kid will give it back. And no, didn't work. And so I had to go through 3 of those, went through 3 of those fair hearing decisions, and we won every one. Not that I didn't lose some hair while I was going through it, but we won every single one of those. So long story short, if it's not too late, is they work in New Hampshire, but I understand why other attorneys have been telling people that they don't, and that's why. The Braderman case. Folks, I think that was a great question, but also I want you to understand that if you're going to get these trusts, please don't be afraid of them because the word irrevocable is in there. This guide I'm giving away offers question and answer format, probably the top 35, 40 questions that I come across, and I keep updating the guide as I get new questions as to how they work day to day. Can I live in my house? Can I sell my house? Is it a taxable gift when I put it in? Do I have bad income tax problems when I sell, when I'm living day to day? Can I sell my house? Do I have an adverse capital gains tax if I do that? Can I put my rental property in? Can I collect my income? Folks, everything you need to know about how these trusts work are in here. And I think at the end of the day, if you've ever wondered if it's right for you, this will answer that question. You'll either like it or you'll hate it. I don't know the answer to that, but you'll know the answer. Get the guide, 866-848-5699 or legalexchangeshow.com. Again, 866-848-5699 or legalexchangeshow.com. You can download it there. And Cushing Dolan PC, our Instagram page, also has much more information.
Todd, we got another one here for you. Let's go to, it's Ken in Charlestown. Ken, you're on with Todd Lutzke.
Good morning.
Morning.
I have a rental piece of property. Mm-hmm. It was in a grantor's trust with my father and I. We were both trustees and both beneficiaries. My father passed. When I sell this, what are the capital gains going to be? Where will they be?
So I got to ask you some more follow-up questions. One, because I don't have the document in front of me. Maybe you can shed some light on this. You and your dad were both trustees. I get that part. But who was the donor of the trust? Who was listed as the donor? Just your dad? I'm hoping.
The property was left to an estate and signed over to my dad and I at the same time.
So this
put into the trust.
So this property, who owned the property when the person died?
My grandfather was in a trust prior to this.
And that trust then paid it out to you and your dad?
Yes.
So upon granddad's death, the property came out to you, grandson, and dad, son.
Yes.
Okay. You guys then prepared a deed transferring the property into this new trust, correct?
Correct.
Okay. So you owned half and your dad owned half?
Yes.
Okay. So was this trust revocable or irrevocable when you created it?
Revocable.
So here's going to be the answer, I'm fairly certain. Again, not reading the trust, I can give you the for sure answer, and whether there's another half step up in basis or not, I wouldn't know without reading it, but I'm going to suspect no. So here's what happens. When you transfer an asset to a revocable trust during life and die with the trust owning it, meaning you controlled it, you are a beneficiary, then that's included in his estate, and it gets a step up in cost basis for that piece. So if he put half in and he died, only his half would be included. And so half would be stepped up in basis. So if the property is worth $1 million when he dies, $500,000 would be the cost basis plus whatever your basis was when you put it in. Meaning your half, whatever your basis was when you put it in. So that would be helpful. Now, if this trust for some reason, again, it's strange that it's done by a father and a son, but if this trust for some reason had a general power of appointment in it, which means you can appoint or he can appoint where the other one's half goes, including to themselves, even though they don't exercise that appointment, that power of appointment, it would cause your half to be included in your dad's estate and there would be a full step up in basis. But understand that full $1 million would be subject to estate tax. But again, as long as your dad is worth less than $15 million, there's no federal estate tax. And as long as your dad is worth less than $2 million, there's no state estate tax. And it would get a full step up in basis. So if it was worth $1 million and it was fully included in your dad's estate, it would now have $1 million basis, and it would go wherever your dad directed it to go upon his death. If it's to you, now you could sell it for $1 million and there'd be no capital gains tax at all to pay. Again, not sure what the estate tax situation would be because it would be fully included in your dad's estate. Now, if this was a husband-wife situation, that general power of appointment in a joint trust would be in there if we did it. It's the father-son relationship that's causing me this pause. So you need to really read the document to see if you can find that power of appointment that allows you to direct where the other one's half goes, including to yourself, your estate, creditors of your estate. If that's in there, then you might get full inclusion. Otherwise, I think it's pretty safe to say you're going to have half inclusion, which is good.
Mr. Lutsky, thank you so much for joining us today. We appreciate it.
Always a pleasure.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated.
Still more to come as we head towards hour 2. We'll be talking a little bit about the upcoming earnings season and what to expect from it. We also have a few different AI stories we'll be covering. Also going to touch on, what happens if you haven't saved enough for retirement? What are some of the different levers you can pull to try to fix that situation? And then we're also going to be talking about whether anyone in America would buy tiny little electric cars that only go 25 miles an hour but cost less than $14,000. We'll have all that and more coming up in hour 2.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our number one killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark, collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Many people assume that if an asset is irrevocable, it's completely out of their hands. That's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to maintain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our new guide this month is titled Talking to Your Kids About Inheritance. Mike, what are some of the considerations for what needs to be brought up in conversations with your kids about their potential inheritance?
Well, first things first, I don't think it's always necessary that you do have the conversations, but just beware that if you don't, it can lead to confusion after the fact, especially if it's a non-equal distribution of assets. It can oftentimes lead to infighting. We've all seen that one before. And it can oftentimes lead to people making financial decisions because they're unaware of an inheritance that could be coming, that might have been different had they been aware that someday, hey, this might be coming my way.
They're never easy conversations to have, but they're typically easier before there's a crisis as opposed to having to have them during or after the crisis.
Well, I mean, to put it plainly, at a certain age, you might not be able to explain the decisions, and that can lead to even tougher conversations. But what I would urge people is to, think about how to have those conversations, because, like I said, on more than the number of occasions that I would like to see, I have seen inheritances tear families apart. Unfortunately, that's what money can do to people. And if you have those conversations up front and early on, it can at least go a long way to potentially prevent that.
The guide is titled Talking to Your Kids About Inheritance, and you can request it by calling 800-393-4001. You can also request it online at armstrongadvisory.com, and that phone number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
It's Chuck, Paul, and Tucker with you here, and quite honestly, kind of just a gross day in markets. Very nice outside. The weather here is lovely. But it's like the opposite of that song about like the weather outside being frightful, but the fire's delightful. The weather's actually delightful, but the market is pretty frightful right now. We'll see if we can amend that one for the upcoming holiday season. You got stocks broadly selling off nothing crazy. Anywhere from about 0.75% on the NASDAQ to 1.5% on the Dow. So like it's nothing crazy, but it's pretty broad selling that's happening right now. The majority of stocks are down. We've only got around 100 stocks in the S&P 500 that are positive today. So a lot of selling pressure. Bonds getting hit by selling pressure as well. They are moving to the upside in yields. 10-year Treasury up 6.6 basis points to 4.595%. So we're seeing those moving back up the last few days as well. Gold and precious metals as a result getting hit. Gold is down 103.60 an ounce to $4,053.80. So again, like nothing really going great here. The only place in markets that is seeing some green broadly is crude oil, which is not the place you want to be seeing green. But on renewed conflicts between the U.S. and Iran overnight, as well as the president saying that, in his opinion, the ceasefire is over, and Iran threatening to retaliate with 2-to-1 responses in the event that the U.S. strikes again, you've got crude oil up 7% today on West Texas Intermediate to 75.42. AAA national average for gas prices not reflecting this. It is up 0.6 cents to 3.79 6/10. But based on where we're sitting right now, if this is anything more than a momentary blip, we're probably heading back towards that 390 range with oil, now in the mid-70s, and we'll just have to see how things go. I don't know if this is just going to be like a day or two and then it's done, or if this is, kind of the start of, renewed tensions between the U.S. and Iran, but we'll see where this goes and see what happens. At think that's basically everything that is moving that's notable in markets. If you're looking for like the places to hide in markets right now, today, energy, as you would expect following that, energy stocks are moving up, so you've got that happening. China's seeing a bit of a rally today as well, and that's pretty much the only place that you can hide. Semiconductors are up a little bit today after selling off for the last several days. There's been a ton of volatility in the semiconductor space, and we'll discuss that a little bit later. But, yeah, this is, again, just kind of an ugly day overall. They happen sometimes. Doesn't mean that the world is ending or, the sky's falling. We'll just have to see what comes of it in the coming days. Speaking of which, we've got an earnings season that kicks off in earnest next Tuesday as the big banks get moving. And Goldman Sachs saying that, hey, this wave of earnings surprises that we've seen for the last couple of quarters going to be a little bit challenging to repeat given what's now priced into the market, Paul.
Yeah, what we saw in Q1 of 26 was year-over-year earnings growth of 25% plus. A lot of that driven by companies in the tech sector, but also it was broader based too. We did see many of the sectors within the S&P 500 seeing some pretty positive earnings growth. Now the bar remains high, or perhaps slightly higher for Q2, where analysts are really going to be looking for a continued momentum of earnings growth. The consensus forecast for Q2 is that 22%, but it seems as if that it's going to be hard to sort of surprise or impress market pundits and investors because, Q1 really reflected the sort of trickle-down impact of the huge CapEx expenditures from the big hyperscalers that is upwards of $700 billion by the Microsofts and Googles of the world that is having impact to a lot of different businesses, Micron and SanDisk and others being some of the biggest beneficiaries. It just seems like now this is sort of built into expectations, so I feel like it is going to be hard to have Q2 be appreciated or acknowledged as much as Q1 earnings, Chuck.
Yeah, I think that's fair. And, in terms of the expectations and where people think the growth is going to come from in earnings, it's two places, as you mentioned. It's tech, and energy also is the other place that you're seeing these higher earnings projected as well. Remember, Q2 encompassed the period where oil was, in that $90 to $115 range. So even though prices have come down subsequently, you had a big chunk of that quarter where oil prices were heavily elevated. And so energy earnings, the estimates of them grew by 61.5% over the course of the quarter. So that's according to data from FactSet. So you've got a lot of this just priced in right now. And again, it's not to say that this is bad or the end of, any of what we've seen in markets, because here's the thing. We've gone through a few of these cycles since the AI boom kicked off in early 2023. We've had 3 distinct times where it looked like the AI cycle was slowing down and then subsequently picked back up. Mm-hmm. The first was towards the middle of 2024. Right around this time in 2024, you saw, not semiconductor stocks, but it was the big hyperscalers at the time. They were kind of, on shakier ground, and then they found their footing and they moved along. About 6 months later, in Q1 of 2025, started happening again. And then in the spring and summer of last year, they took off as, new customers were announced and so on and so forth. We saw another wave of this starting in Q1 of this year. Again, tech stocks kind of lagging in this and that. That ended in late March when everyone started getting rate limited and throttled and having their usage throttled because there just weren't enough chips to power all of the demand that was now showing up for AI. So we'll see where this goes from here. I don't know that, this is anything more than just, hey, AI stocks and semiconductors taking, a month or two pause or maybe a quarter or two pause. It could be the start of that inflection point where, as we've talked about, hey, in every semiconductor cycle we've ever seen, you get to a point where things get pretty ugly, and maybe this is that point as well. I don't know, but it certainly is a period where the expectations for those earnings are high now because this has been priced in, And so companies got to do something really special in order to, keep that train moving.
Yeah, I think there will be less emphasis on the numbers and more emphasis on commentary. I do agree with what is put out here in the Bloomberg piece that any sort of commentary specific not to earnings but to expenses and CapEx build out from the big hyperscalers will be scrutinized really heavily. They're going to want to see investors that they're keeping on that same trend.
So that's what we've got coming up in earnings in the coming quarters. When we come back, let's take a quick break now. When we come back, we'll do a little bit of trivia, and then we're going to talk SpaceX next.
Smart financial talk whenever you want. Find the Financial Exchange on YouTube. Hit that subscribe button and keep up to date on daily business news from New England and around the country. This is the Financial Exchange Radio Network. Protecting your assets from the cost of long-term care takes more than good intentions. It takes a plan. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, shows how these trusts can help protect certain assets from nursing home costs without giving up everything you've worked so hard to build. You may be surprised to learn that you can continue living in your home, receive trust income, and still maintain important flexibility in your planning. The guide also explains how these trusts may help your family avoid probate and preserve important tax benefits for future generations. If protecting your home, investments, or other assets is important to you, request your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The document may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Markets move fast. Follow the Financial Exchange live on X so you never miss a story. This is the Financial Exchange Radio Network.
Subscribe now to our YouTube page where you'll find full shows of the Financial Exchange. You'll get caught up on anything and everything you might have missed right here on the Financial Exchange Radio Network. Just search the Financial Exchange on YouTube and hit that subscribe button. Time for trivia here on the Financial Exchange, and today is the birthday of former U.S. Vice President Nelson Rockefeller. Before becoming vice president, Rockefeller served as the governor of New York for 14 years. So, trivia question today. Which president did Nelson Rockefeller serve as vice president under? Once again, which president did Nelson Rockefeller serve as vice president under? Be the fifth person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the fifth correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
A small rocket company out of Texas by the name of SpaceX began trading on in the NASDAQ 100 index yesterday. SpaceX obviously listed on the NASDAQ, but the NASDAQ 100 is a smaller, more exclusive index that, well, again, as you would expect, it's, 100 of the most important companies on the NASDAQ. And so it started trading in the NASDAQ 100 yesterday, and the shares fell 6.8%, which made people want to write a story about it, even though it doesn't really matter what a stock does on its first day of an index inclusion. I think that the more interesting thing to me, quite honestly, Paul, and this is from a good friend Luke Kawa from Sherwood News, who we have on the show from time to time, the first day that SpaceX traded, its daily volume was north of 160% of Nvidia and Micron shares. Okay, so like everyone was trading this thing. Mm-hmm. What we are seeing now is that as recently as last week, there was a day in which SpaceX trading volume was only 6.5% of Nvidia and Micron. So just not as much trading interest. Some of this is due to the fact that the float is lower, so there are just few shares to go around. But if people want to buy it, you can turn over as much of that as you want. Like it's what it is. But I do find it interesting that I got to be honest with you. Look, maybe it's because I've been on vacation for a couple weeks. I haven't heard many people talking about it much in the last week or two. Like it seems like it's not that it's fizzled. It's just okay. It's become another stock in the background, and we don't have to talk about it every day. And I actually think that that's a good thing if it's not being highlighted as much. I think that whenever everyone is paying attention to one particular stock, it tends to be a challenging environment to operate in, where you've got to do truly extraordinary things in order for the stock to keep moving forward. And I think it would be the best thing for the stock if it stops being, something that everyone needs to focus on every hour of the day.
Yeah, it's definitely come up in our stack more so of a reflection of it being post-July 4th and just kind of a slower time. But the commentary around it, to your point, is not so much about what is happening with the company or the business. It's much more about these anecdotal stories on their inclusion in the NASDAQ 100, and also there's the rumor out there of the potential merger between Tesla and SpaceX. But again, this is all just people who write in financial presses for, clicks and for views, sort of putting it together, but less emphasis sort of on the actual company and trading the stock itself. It's just sort of, hey, it's out there, let's wait and see. I don't believe they come out with their first earnings report. Again, this stock is not going to be really driven by earnings because it doesn't make any money, but they'll obviously have some more commentary on their plans. I don't think that's until early August, I want to say, when they come out with their first earnings.
It'll be fun.
Yeah,
that'll be fun. If the two companies did merge, Tesla and SpaceX,
mm-hmm.
What would you call them?
Spesla.
Space Tesla?
It's got to be an X in there, knowing Musk. It's whether we're ending it with SPACs.
Tesla?
Spesla?
I just said that.
Yeah,
you call
that's my ex.
You could call it Teslax, but that sounds like a different kind of product.
Yes, it does.
He'll probably just call
More
it
of a
X.
laxative.
He'll probably just call it X.
Well, they
like
could
he
get
does
into
everything.
laxatives. Like that would kind of be
They
full,
could.
full circle, I think. I don't know how, but it would be. Anyway, so that's what's going on with SpaceX. I think if they can blend in the background more, which is not really a strong suit of Elon Musk's, but if they can blend a little bit, I think it would actually be the best thing for them. Apple going to spend $30 billion buying U.S.-made chips from Broadcom. This actually, not like... I have two divergent views on this. The first is, I think it's really impressive that we've gotten to the point where we have the chip production available domestically for Apple to be able to buy these.
Right.
Like, I think that's great. By and large, this $30 billion is happening over the next 5 years. It's money they were going to spend somewhere anyways, so it's not exactly like new money or anything like that. They had to buy these chips from somewhere, but I think it's great that they're able to do it from U.S. production because it does show that we're finding ways to, boost up semiconductor production domestically.
Yeah, I think the hard thing that I have sort of processing with this story is that there are so many different types of chips, and once you kind of
These are not the expensive ones.
That's kind of where I'm going with it. It's like, I think that if you weren't dialed into it, you would just say, oh, generally speaking, if you're just following the semiconductor market, you know that the most sophisticated chips get manufactured in Taiwan and South Korea. And largely, Taiwan really does the highest cutting-edge ones, Taiwan Semiconductor. So I think at first glance, you can say, oh, great, we're putting some more of this production back on shore. While Taiwan Semiconductor is building a fab in Arizona, these chips, these radio chips that are manufactured by Broadcom, have been manufactured by them for a bit. It's good that Apple continues to purchase from them, but and that there's continued investment in building out U.S. general semiconductor manufacturing because that is a weakness. But on initial glance, you could think as if this was us, taking away some of the manufacturing prowess from Taiwan, and that isn't the case here.
No, in this case, I'll quote. The iPhone maker said Wednesday it's forged a new deal with its longtime partner that will spur the production of more than 15 billion chips on U.S. soil. So I did the math so that you don't have to. If you divide 15 billion, or rather if you divide $30 billion by 15 billion chips, it means the average chip cost is around $2 a chip.
I couldn't believe,
So these are not, the Nvidia processors that are going for like 40,000 a chip or 50,000 a chip.
It was,
These are like the basics that go into it. It's like, oh, you need like something that is going to like a Bluetooth chip that's going to be in your phone.
If you want to hook up your phone to your car, that chip queue is from Broadcom here.
Right,
that's what we're talking about.
That's the kind of stuff, which, again, it's
important.
Great. You still need to have this stuff produced domestically, but it's not the stuff that we really need to ramp up because, listen, you need anything in the semi space, but this is stuff that we've been able to produce for a while also domestically. Yeah. So it's good, but I think you got to understand what it actually is here. Speaking of Apple, in a contest that I really just don't care about, piece from MarketWatch, Apple's closing in on Nvidia as it looks to reclaim the title of largest U.S. company. So I got to be honest. I know that we like to refer to like the largest company based on market cap because like value is, what matters in this and that. I really think that if you want to say that you're the biggest company, I think you got to base it on revenue, to be honest. Like let's say that next year SpaceX goes and triples, and so it's a $6 trillion company.
Its economic impact is not nearly as significant. It doesn't touch like Amazon touches everybody from packages at their door or Walmart. I believe my guess on the top revenue, it's going to be one of those two that they do $100 billion a quarter-ish, that they would probably be the ones that have the revenue grab. But I can see that argument that we are far more exposed to those companies than we are Nvidia. Think about our day-to-day. It's not really impacted by Nvidia. Apple, I guess, certainly all of us are as consumer-facing hardware, but certainly Nvidia is largely being sold to those hyperscalers.
Let's take a quick break. When we return, we've got the trivia answer and Wall Street Watch.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about how Medicaid irrevocable trusts operate. Now, Todd, it takes 5 years to protect your assets from the cost of long-term care. If you aren't sure you or your spouse will make the 5 years before going into a nursing home, should you even bother to do your estate planning?
The answer is absolutely yes, you should bother. And here's why, folks. There's people who maybe don't even start their planning until they're 80. It doesn't mean just because you're 80, you don't try, you don't plan, right? 85, you plan. You don't know whether you're going to get sick or not get sick. But by the same token, when you're 65 and you're doing your planning, you also might not make it past the 5 years. So just because you might not make it past the 5 years is not a reason to get this clock started. For example, lots of times when we put assets in the trust, we leave lots of assets outside the trust, especially IRA assets. So let's say you made it 3 years, but you had $200,000 in an IRA outside the trust. If I got $1 million worth of assets in the trust, I'm happy to spend $200,000 of my IRA to get past the remaining 2 years to get me protected from the nursing home with the $1 million that went in there. So getting the clock started is always better than not having the clock started.
Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. Request this brand new guide called Unlocking the Power of Medicaid Irrevocable Trust. Call 866-848-5699. That's 866-848-5699. Or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are now accelerating their losses by midday after President Trump said the ceasefire with Iran was over, following another round of Iranian attacks in the Strait of Hormuz, sending oil higher. Right now, the Dow selling off 1.5% or 809 points, S&P 500 down nearly 1% or 71 points lower. NASDAQ down nearly 1% or 248 points. Russell 2000 selling off 1.5%. 10-year Treasury yield up 6 basis points at 4.59%. And oil jumping 7% higher, trading right around $75 a barrel. Energy stocks, including Chevron and others, are seeing gains in reaction to increased tensions with Iran, while travel stocks, including United, Delta, and Carnival Cruise, are seeing losses of anywhere between 3 and 5%. Meanwhile, Apple said it plans to increase investment in U.S.-made chips, with plans to spend more than $30 billion with Broadcom in the next 5 years. Apple shares down modestly, while Broadcom up by 4%. After sinking 18% yesterday following plans to sell more shares, Rivian Automotive stock is down about 2% today. And at 2 o'clock this afternoon, the Fed will post meeting minutes from Kevin Warsh's first meeting as Fed chair. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question: which president did Nelson Rockefeller serve as vice president under? That would be Gerald Ford. And Phil from Westboro, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Phil. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Paul, we got a piece here from Market Watch. It's titled, "Haven't Saved Enough for Retirement. Here's What Not to Do." Quote, "It's usually wrong." What should one not do if you haven't saved enough?
The biggest thing would be the focus needs to be on maximizing your savings, but not trying to swing for the fences from an investment return perspective. The discipline needed to just try and increase your savings and build the base that you need for retirement is far more important than trying to invest overly speculative or trying to make up for lost time not investing in the market by putting all your eggs in one basket into one company or into taking on investments that you think are going to pay off with greater returns but have a great deal of risk associated with them. So that certainly is a big one here. And the other one is just understanding sort of what you are going to need in retirement, I think is really important. So that way you can have a base towards building that you need to build towards, rather than just saying arbitrarily you're going to hang it up at a certain point in time. So I think on the risk side, or the biggest mistake is just not trying to overdo it and swing for the fences on the investing.
Yeah, the place where it does make sense to try to overdo it, if you're set on, hey, I need to retire at this point, but I haven't done enough beforehand, the place that you need to overdo it then is, okay, how can I increase my savings rate? Like, what can I do in order to get more money into these accounts? And look, that has trade-offs. There's different ways that you can save more money. The first one, you can work more years. That allows you to save more money. The second, you can spend less during the years that you already plan to work in order to save more during each of those. And that has the added benefit of, hey, if you get good at living on a smaller monthly budget, well, then you also don't need to save as much because you're not needing to spend as much later on as well. So there's different trade-offs depending on how you approach it. But yeah, trying to swing for the fences and hit home runs, it quite honestly, like, I understand the impulse. I do. Like, I totally get it. But you have to understand the reason why most of those home runs are priced the way that they're priced is because they're not going to work out in most cases.
Right.
Like it's just how it is.
Having a recurring plan of savings to me too is so critical. You can't just say you're going to save more and tab it for the end of the year. It really has to be something that is regimented, similar to a 401k contribution where it comes right off the top or right after your paycheck. I think that is really critical.
Folks, the Armstrong Advisory Group has a new guide available this month. And look, I got to be honest, when I got into the investment management world, one of the things that no one ever told me was that, unfortunately, like I'd be dealing with an awful lot of death. Like when you work with folks that are older, the unfortunate thing is there comes a day when you can't work with them anymore. And, I didn't really understand this starting out, but, having been in the business for 17 years now at this point, you see some things. And one of the things that we noticed, as a firm is just that families need to have conversations about their inheritance in advance. And there's no right way to do it, but the wrong way is to not have the conversation at all. And so we put together a guide on this topic. It's titled Talking to Your Kids About Inheritance, and whether you're planning on leaving them nothing or a healthy nest egg. It's a conversation that needs to be had. And this goes through, hey, when should you have the conversation? What topics can you potentially discuss? What are ways to have different discussions depending on what you're comfortable divulging to your kids? And again, I think it's a really important topic because, look, the worst time for an heir of any kind to learn about an inheritance is as it's being given to them because they haven't had time to prepare for it. And having the conversations in advance, always a better option if you can. So the guide is titled Talking to Your Kids About Inheritance. 2 ways to request it. The first, you can call 800-393-4001. Second way, go to armstrongadvisory.com and click on the monthly guide button, and you can request it there. Again, that phone number is 800-393-4001, or go to armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Piece in the Wall Street Journal talking about the 2 major U.S. AI companies. It's titled, Anthropic's Political Risks Are Real, but OpenAI's Loom Even Larger. And here's the rub. This piece is talking about, okay, like Anthropic, has had some disputes with the Trump administration over a bunch of different stuff. OpenAI has not. OpenAI has, more kind of cozied up to the Trump administration. And basically what the piece is outlining is, okay, like, yeah, Anthropic might have trouble now, but depending on how, subsequent presidential elections go, maybe OpenAI has more trouble. The fact of the matter is I have no idea what's going to happen in 2028, 2032, 2036, and 2040, which is why most smart companies don't usually try to pick sides when it comes to the parties that they are donating to or supporting. There's a reason why, if you look at, donation histories, for, executives historically, most of them tend to donate to both major parties because they want to be in the good graces of whoever is in power at any particular point in time. So, look, I don't know who's going to have, the bigger problems politically, 2, 4, 6, 12 years down the road. What I do know, the bigger problem, in my opinion, is, hey, if you're running a company and you're like, well, I got to hitch my horse to that wagon, I'm just not sure that that's something that you should be doing because you don't know how future elections are going to work out either.
Yeah, I think we saw this to cover a different sector on the auto manufacturing side where there was a tremendous amount of investment in electric vehicles by a lot of the major U.S. manufacturers. And that was, I think, heavily influenced by policy at the time, and now it's shifted back in the other direction. And the major takeaway is just, on a business side, you shouldn't invest for what potentially the political climate may be in favor or of against. You should invest in things that are going to sell and be of use to consumers.
Sticking with the AI topic, American AI companies say Chinese copycats are quickly catching up. They say they're unfairly copying their AI systems using a technique called distillation. Are you surprised? This is.
Have you not been watching the last 30, 40 years?
Have you not, do you not understand how Chinese companies basically examine their Western counterparts, figure out how they work, and then try to undercut them on price while increasing supply dramatically? This is what China does in just about every
It's the playbook.
Industry they get into. It doesn't matter if it's electric vehicles, solar panels, electronics, nose rings. It doesn't matter what it is. This is the general playbook for China. And sending a strongly worded letter saying, hey, do something about this to Congress. Well, guys, this is what it is. And the other piece that I will add, we've talked about this for the last 6 to 9 months as well. Hey, when you start releasing more models in the AI spectrum, it's a sign of commoditization.
Mm-hmm.
If there's one thing China excels at, it's competing often unfairly in commoditized battlefields. That's what they do. So I don't know what
you can yell and scream about this as much as you want, but there's nothing. There's almost nothing to be done
unless you're willing to accept the pain of confronting China directly and what that means. Then there's not much that can be done on this.
There really isn't.
The U.S. government doesn't have any jurisdiction.
It may not be unfair. It may be unfair, or it may be frustrating to these companies that have close to $1 trillion valuations, and their proprietary models are a big part of the IP behind those valuations. Ultimately, there's always going to be attempts to try and rip off that IP.
Quick break here. When we return, Stack Roulette.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show.
The most important part of an inheritance isn't always the money. It's the understanding, the intentions, and the family relationships left behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, estate planning isn't just about who gets what. It's about communicating your values, explaining your decisions, and helping to avoid misunderstandings after you're gone. Our new guide, Talking to Your Kids About Inheritance, explains why these conversations matter and what to consider when fair and equal may not mean the same thing. You'll learn strategies for managing expectations and helping your family understand the thinking behind your plan. Get your free guide today by calling 800-393-4001. That's 800-393-4001, or you can request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
Let's do a little bit of stack roulette. Paul, can I start things off?
Sure thing.
You like bats?
Baseball bats?
No, bats, the animal bats. Batman.
Not a huge... Son's a huge Batman fan, but not a fan of bats.
Yeah, I'm not a big fan of bats either, and neither is this pilot from California, who apparently was slumbering overnight in Denver between legs of, flying. And I guess the story is that there was an opening under the room's AC unit that a bunch of bats ended up living in, and they didn't give him a new room. He tried to stuff the hole with a towel, but the bats came through while he was sleeping.
Now, this was like 2:30 in the morning, right?
Yes, the bats came through while he was sleeping, and he had to fight them off because there were bats flying around the room, and one of them bit him, apparently on his ankle or foot. And so if you get bitten by a bat, you got to go through rabies treatment and this and that. He racked up $102,000 in medical bills, and so he's asking for damages to cover those, plus pain and suffering. The hotel, which happens to be under the branch of Marriott is apparently not offering even a quarter of what the medical bills were, according to the plaintiff's lawyer. So, again, what's being publicly said, I don't exactly know, but what I can tell you is... it's hard to think of something worse than waking up with a bunch of bats floating around your hotel room.
Definitely, it is up there in terms of hotel room disaster experience that...
specific to, a room. Obviously, hey, the whole hotel burnt down. That would be bad. I get that.
Right.
But, you walk into a room and things that, you don't want to see... they're the inconveniences where you're no, I need another room, bed bugs. Mm-hmm. You see a few of those, which I've been in a couple of those places. You're no, this isn't going to work. Sorry, can you put me somewhere else, or I'm going to go to a different hotel because the bugs might follow me. Bats are kind of a deal breaker.
Bats are definitely a deal breaker. Any birds, deal breaker, but not nearly as concerning as having a bat in your room. Anything, any critter that you're up against in your hotel room, just not a good time. Why is Marriott playing such hardball? They got the lawyers on staff. Why can't they just? Why is this even in the news? How come hasn't just been settled?
Don't you not want us talking about the story that one of your Denver hotels had bats in it?
not to belittle $100,000, but like relative to Marriott Skies and Scope,
It's a rounding error.
That's what I'm saying. Like, why the PR from this story alone getting out is far worse damage than anything that could have just been financially just taken care of very quickly here with a quick check to. But I guess they just want to drag it out in court and use their lawyers on retainer to make this work.
And also, they couldn't get him a room, they said, because it was so in the middle of the night. Huh?
Like, what does that mean? Do
you have a room or not?
You run hotels.
Put me a cot in the lobby because I'm not staying in this room because it's infested with bats. What are we doing? Get the guy out of the room.
So, yeah, it just doesn't make it just doesn't make much sense.
There's no one in the gym at 2:30 in the morning. Put a cot in there.
Yeah, I'd much rather be in there.
What's the worst hotel experience either of you have had?
I stayed in a hostel in Amsterdam studying abroad.
No. It's got to be a hotel. Hostel's different. Different animal.
Okay.
Like the expectations there are just different.
It's not going to be nearly as bad in this case with hotel, but walked in and people's stuff was in the room, so they had assigned us the wrong room. It's like, whoa,
this is a problem.
Yeah,
like big
someone could walk
problem.
in at some point. Like, how did I get in here, and why is there people's stuff in here? That was the worst, but it doesn't come close to the bad experience. How about you?
So senior year of high school, somehow we, my friends and I, we convinced our parents to let's go to the Bahamas for spring break.
Oh my God.
We were the only high school people there. We had to like make up that we were in college because everyone was just like, "What are you guys doing here? Like, you shouldn't be here." So the first day, I wake up in the morning, and I'm like, okay, got to go to the bathroom. Flush the toilet, and immediately afterwards, the ceiling above me opens up, and water just starts pouring out into the. I don't know if it was like related to me flushing the toilet or just a coincidence. But I flush it, and the ceiling above just starts pouring out water from this drop ceiling just everywhere. Just like,
You were like the last possible flush before the pipe exploded.
Well, here's the thing. This was in like early 2000s. It was airfare, hotel, and all meals included, and it was $500 for the week. So the quality of place wasn't particularly good.
That's pretty cheap.
Like it was not a high quality establishment that we were staying at, so it was fine. I still don't know how they fixed it, but like we came back after the morning and everything was fixed.
Duct tape.
Most likely. Taking a look at markets as we head towards the top of the hour. Still in negative territory. We've got the Dow off 1.5%, S&P's off 1%, NASDAQ off 1%. So all major indices now getting bopped on the head pretty good. 10-year Treasury continuing to sell off also. Down 6.4 basis points. Sorry, up 6.4 basis points to 4.593%. We're done for the day, but the good news, we're not done for the week because it's only Wednesday, which means we're going to be back tomorrow and Friday. You should join us for both of them because it's going to be a party. Let's take a quick break for the rest of the day. We'll see you tomorrow on the Financial Exchange.